everyone, it is your financial coach Donna, and I want to welcome you back to Growing My Wealth with Donna, a place where we're changing our mindset about money and increasing our wealth. You know, I always like to start my video with a question. Today's question is, what is your strategy for long-term investing? In my previous video entitled The Basics of Investing, I introduced you to the most common investing terminologies and how to make money in the stock market. Today, I will talk about the typical overall strategy for long-term investing in the average household. Generally, the overall strategy for long-term investing is to achieve your long-term financial goals by balancing risk over an extended period. To grow money and protect it against market unpredictability as much as possible, you must know the meaning of the word diversification. Diversification means having investments in your portfolio that will react differently to the same market or economic event. For instance, when the economy is growing, stocks tend to outperform bonds. But when things slow down, bonds often hang on better than stocks. By holding both stocks and bonds, you reduce the chances of your portfolio taking a big hit when the markets swing one way or the other. Diversification helps you minimize the risk of loss to your overall portfolio, exposes you to more opportunities for return, safeguards you against adverse market cycles, and reduces instability. So, when starting to invest for the long term, please consider the following 10 factors. First, balance your finances, which appears to be the key to everything in life, including our finances. Focusing too much on one type of investment over the other or being overly aggressive with your strategy could get you into trouble. Trouble means you are overweighted in stocks at a critical stage in your time horizon when the market abruptly changes and your portfolio takes a giant hit. Diversification is a great way to bring balance to your investment strategy. Next, learn the business of investments. In this case, ignorance will not help you to achieve bliss. If you're betting your valued savings on an investment, then don't go into it blind. Do your due diligence and make sure you understand the mechanics of investments to inform your decision making. As I said earlier, do your own personal reading on investing. Another critical factor is to start investing early. Assets have a better potential to grow the longer they are invested. Any financial expert would encourage young people to start investing today to ensure that they are in a better financial standing in the future. Someone who starts investing at the age of 20 will have a significantly larger return than someone who starts at 30. Also, take advantage of a 401k match. If your employer offers a 401k or other retirement savings plan, matching plan, take advantage of it. This is essentially free money. Your employer may have some stipulations such as a minimum contribution to be eligible. However, these conditions are a small price to pay when you are doubling your savings. Cash flow management is also essential. Committing yourself to a cash flow plan is simple in theory, but maintaining your discipline is the hardest part. Setting up a system to automatically invest a percentage of your paycheck each month is a great idea. If you have the money taken out automatically, it is out of sight and out of mind. Hopefully, this will eliminate the feeling of missing your money. Also, you want to consider investing your discretionary income. Discretionary income is money left to spend on luxury items, services, or vacations, and other non-essential things. So, it would be best if you determine what your wants are and what your needs are. It is easy to trick yourself into thinking that your wants are your needs. Have a plan to save or invest as much discretionary income as you can. This will take discipline, but you will thank yourself later in years. Please watch my video entitled, How Can I Save More Money? Another critical step is separating investments and cash reserves. You can find yourself in a pickle if you need quick cash, but all of your money is tied up in investments. In an emergency, this might force you to sell your investments at a loss. Instead, protect your investments by building up a cash reserve in case of an emergency. Check out my video entitled, How to Start Your Emergency Fund. Making stock investments is also a key factor. The S&P 500 index has provided an average 7% return for 20-year investment periods since the 1920s. Being in the stock market, especially with compound interest, should be an essential part of your strategy. You must also diversify your investments. I can't say it enough. Diversifying your investments is the best way to protect against risk. Simply put, when one investment strategy fails, it'll be less painful if you have backup in other areas. You can minimize your risk by investing in various assets that are characterized differently. Some examples include market capitalization, domestic versus foreign, or growth-based versus value-based. Lastly, make small adjustments. Being a great investor is like being a good sailor. You never want to make jerky moves or change because you will unintentionally end up overcorrecting or getting undesirable results. Investing should be thought of as a long game where only slight changes are made. Patience and holding steady are two characteristics you will need to develop. As mentioned earlier, long-term investing can be a critical component in helping you reach your future financial goals. Please keep in mind that the 10 long-term investment strategies discussed in today's video will definitely help you achieve your investing goals. Lastly, make sure that your investment portfolio is balanced, diversified, and you understand your risk tolerance to protect your money better when the market swings one way or the other. Always remember, past performance is no guarantee of future results. On that note, good luck and happy investing. As always, thank you so much for watching. Please leave a comment, click like, and subscribe below. Have a wonderful day.